Hello everyone, today is August 25th and this is excitingly the open door session of the Tape Reading Lab, which I conduct every Monday with William Reardon, a dear friend of mine and an amazing Wyckofian. And with that, William, welcome back.
Yes, welcome everybody and thank you for attending. And how are you doing, Roman?
Yeah, doing really well. Really looking forward to this session. We've got a lot of exciting stuff. It's an open door, so we have some guests today. Welcome, welcome, welcome. And obviously, we're just going to show you and profile exactly what we do each Monday. And for those of you who are current students in this class, you guys are not going to feel any difference. We're just going to go into our discussions as usual. We kind of so consumed with the discussion sometimes with William that we forgot even to look at the questions. So don't be surprised if you post a question and we don't answer. Well, it's kind of like a limited engagement for us. Let's quickly go through some of the administrative stuff and let's jump after that right away into the market discussion. So as I said, Mondays from 9 to 10:30 Pacific, that's when we usually get together. During the Christmas and New Year, we're going to have a break, no two sessions for those who are going to sign up for, for this course. Here are your teachers, the cost. So today we have a promotion. And this is the first time that we have these promotions for this particular class. For those of you who's going to sign up for this promotion, you will receive 3 recordings for $50. Those are recordings that are going to start next Monday, and then 2 Mondays after that. And that will be our promotional rate. If you decide to join us after that, you could join at 125 as a regular rate. And then, this is still going to be a legacy rate because usually it's 150. And those are going to be live and on-demand sessions. So the promotional sessions are all recordings. If you decide to sign up, those are going to be live. You could attend live classes. And what do we do in this class? Discussion about the markets. We usually look at some of the trades that we do. Occasionally, we would do a trade as it unfolds in current time. Then we'll talk about, obviously, tape or chart reading concepts. That's the main purpose for this class. And we'll do the tape reading exercise either live or simulated. So currently we're going through a Bitcoin exercise. So this is what we're going to do. Limited number of questions from students, but if we see that the question is in line of what we're discussing, we'll definitely entertain that. William, what else am I forgetting here?
No, a lot of in-depth talks about tape reading. That's what I'm excited about, Roman, and sharing with others.
Okay, and by the way, I just want to quickly mention to everybody, because we have guests today, that when we talk about tape reading and chart reading, those are 2 different things. But to us, we kind of see it as reading the tape from the chart. So I don't want you guys to confuse tape reading with chart reading. And I know that a lot of people, when they feel that they're so good, they start pointing out things like, oh, this is not chart, tape reading and so on and so forth. We know, so you don't have to mention this. And with that, with this announcement,
it's under that umbrella. We just label it's the modern interpretation of tape reading, because we have the wonderful functionality of charting software, which they didn't have in the early 1900s. So
yeah, and sometimes William and myself, we have that discussion in the class, like, I think people just need to let us be and just like look at the work that we do, and that's it.
You can label it how you wish.
Okay, well, with that, William, so this is our regular view here. So 8 markets. On the top, we have S&P, NASDAQ, Russell, and Dow Jones. So let's start with those. What do you see?
What would be your first point of call? I do like to see the rally from the Russell. However, it's strong. We are approaching resistance, but it's still lagging, isn't it?
Lagging in terms of what, William?
Well, in terms of relative strength to the other indices.
Okay, well, let me kind of come back to this view then, so that we would see all 4. And yes, indeed, we see that NASDAQ has been making the new highs.
Yes.
S&P has made a new high today and yesterday. And the Dow has made the new high, still slightly behind, but very close to that all-time high. And then Russell obviously is lagging. So from the relative perspective, that's what William is saying. Okay, well, let's go to Russell itself. And William, what's your view on this beautiful trading range here?
It is a lovely, lovely trading range. And the first thing I note here, Roman, is we spoke of this, didn't we? Or this reaction down here. There is some volume in here. However, on the way down, we do close off the lows here. You know, there is some buying here. And if we compare this reaction to the previous reaction over here, can you see any differences here?
Of course. Yeah. Well, okay. Well, yeah, we have to remember that we have people listening to us, right? So let's kind of like go, what's the difference here, right? So these two places, and I would even start, William, with an idea that this is like a mini trading range. This is a substructure. Yeah, you know, you guys have to kind of like see those mini structures. They're everywhere. And sometimes you have to kind of understand, like, for instance, this is a mini structure within a much larger trading range. This is a mini structure within the largest trading range. This is a mini structure within the largest trading range. And as with all of the mini structures, you could just go here on a more lower time frame. This is a daily time frame. So for instance, like 1 hour, and just say, okay, well, we had a climactic action here, automatic rally, testing in phase A, testing in phase B, testing at the top in phase B. And this is a potential phase C of this mini structure. And this whole thing could be a potentially much larger phase C for the whole trading range, for the whole structure. Are we thinking the same way, William?
Yes. Well, I wouldn't be thinking in terms of large structure, but although I see that, but I was definitely coming down to the thought process here from the selling climate.
So let's come back to your question about the difference between, let's say, these two reactions, because when we compare something, we compare it apples to apples, oranges to oranges. So we have, we're looking at
relative analysis. So what do you note here then, Roman?
Well, when I look and compare, first of all, I want to look at the spread, right? So in this case, it's a downward spread because it's a reaction. So I see that in the second case, the downward spread for the second reaction is that spread is diminishing. So that tells me that whatever selling we have on that reaction, it's less aggressive. So I'm going to put it like this. Selling is less aggressive. And that's a great thing because we want to see less aggressive selling approaching a meaningful support area where the price is supposed to stop. And also it's great to see that it's a slightly higher low. So that
good
was
observation.
very attractive.
Additional strength, Roman.
Could you talk about the volume signatures? Because sometimes people come to us and they say like, well, I don't see it. Like, you know, it's kind of the same volume signature. So let me kind of challenge us here. And I want you to comment on the last 3 volume bars to the downside. So could you compare, you know, these 3 areas, the last 3 bars?
Well, first of all, this bar 3 here, obvious to see, it's climactic. I like to see this. When we're comparing here, when we're comparing to the, so if you can just clean up the chart here, right? We do have these bars are similar in nature, but the spread, given the volume, we can see there's better buying in here. Slight effort versus results in this bar as opposed to the previous bar. We can see with the volume, and we make a higher close to bar 2, as we can see. So we know there's evidence of buying here. Now, would I label this bar as climactic? Well, it isn't as climactic or as obvious as this bar over here, but it does have kind of climactic characteristics. If we were to break this down onto, say, a 60-minute time frame, this would be a downward trend, a bear channel, and we do close off the lows. The previous bar, like I just said here, this effort versus result, again on the climactic bar. But if we compare, sorry, if you clean up again.
Clean this up.
Yeah, if we say this is bar 2 here, and this is bar 2. We can just see from the size of the spread and the lower volume, slightly, the volume actually seems to be in sync, which is good, but we can see that there's less selling pressure. So this analog, because these bars are in the same place, aren't they, on the chart, and we are reacting down, yet we do have the supply tails, but the spread is significantly smaller here, which tells me, again, as you said, there is less selling pressure as there previously was. And then again, we end here. It's kind of semi-climactic. And again, of course, we can do another. So if you clean up again, Roman, another analog. So this being bar 1, this being bar 1. And this one here, we have a wider spread. We have a bigger demand tail. So all three of these bars, the character here shows more bullish sentiment as opposed to here, which of course is very, very useful to know. And we gain that information by analyzing these 3 bars to these 3 bars. And what I like thereafter as well is this. Look at this beautiful rally here. And we're coming up to test the highs here, albeit, Roman, on reduced volume. What do you think of this?
Well, I think it's a confirmation of the bullish behavior.
Yes,
And
basically,
let's make a dramatic pause here. Let's make a dramatic pause here.
Okay.
Diminishing volume signature, in a lot of cases, by amateurs and the beginners traders, are going to be interpreted as a weakness, and it's true. But you have to contextualize that. You cannot really use this rule everywhere at every structural spot. So in some structural spots, diminishing volume signature with the advancement of the price, like we're seeing here in Russell, is actually very bullish. So what's the logic behind this? It's very simple. The selling produces the increase in effort, so to the downside. We're seeing that in both cases, on both of the reactions. But at the same time, as we're approaching the support, there is some signs of the demand activity, buying, behind that selling. And that demand increase absorbs the supply that is available. So through the absorption, selling is deteriorating, selling is exhausted or being absorbed, and then just because selling has been absorbed, and demand has, was present at these places right here. In the rally here, what happens is that volume is going down for the reason that the selling is going down already. They already sold what they wanted to sell, and that selling was absorbed. And demand is going down as well because demand was active at those places. And demand has stopped the price from committing below the support. And with that, the price goes up because selling is diminishing, and on the lower demand, the price is capable of going up. So therefore, it's an extremely bullish view.
Yeah, 100%. If we can take a step back here, we can think from a macro perspective. Look at this first kind of reaction here. Look at the spreads. Look at the high volume. Then we have this reaction. Granted, we don't get extreme high volume, but price is king. And look at the wide spreads. Then we come down here. Again, we're still getting big wide spreads. But then we get this big move here. Okay, and we're comparing this one to this one over here because they're similar in nature. And when we compare this leg to this leg, we can see that, as we just discussed, these last 3 bars, this has more bullish characteristics in these 3 bars, as in the buyers, we're absorbing through the supply. So as you rightly put, if there's a lack of selling pressure in the market and the buyers are in control, because ultimately we are within a trading range here, and the price is unable to test support, which again is very subtle but advanced nuance, this just signifies that the supply has been absorbed. It isn't for the better term of the word, a no demand rally, because the context here is kind of a story of strength at the lows. So if you clean up again, Roman, what I mean by a story of strength at the lows is just look, buying. Look at the tails, buying, reversal, buying, again, buying. We come to the top, we don't see the overt selling tails. So what do you make of that then, Roman? So do you think we're accumulating here? Reaccumulation? Or do you think
for sure. Yeah, for sure. I mean,
yeah,
I was
that's
thinking
my
the
point.
accumulation even here. Just the way how the price behaves at the support level, it just shows a lot of buying through the volume and through the price itself. The question was we ready to get out of this trading range? And I think that even though the bias was very easy to define, I mean, like the overall bias, like when the price gets out, everybody's going to say like, oh, okay, like now I understand what you were talking about, guys, at that spot, that the bias was a reaccumulation. The structure was not complete yet because we're looking always for the bias, timing, and the character. And the question of timing at this spot was all about this rally. When we look at this rally, this is not a very dynamic rally. So we have definitely buying off the bottom where we have the volume increase, demand is increasing, volatility to the downside, to the upside increases as well. But then look what happens next. The up spread starts to diminish, and that shows that the buying is not strong. And that still suggests, and this is a lot of the times people just kind of like, have to spend some time thinking about this concept. You could be in the bias in the trading range structure, which is accumulation, reaccumulation, and yet the timing might not be correct. So that's why, we always talk about bias, timing, and character. So the character suggested not the time right now. So as we go down, what happens here is that there is selling, 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 and that produces increase of the supply. With that type of selling, a value proposition is being created, for the composite man, for big institutional hands. And what do? They come in and they saying, okay, well, there is a value. And like, in my work with the hedge fund, that's usually what we would be looking for. Is there a value for us that we see like a long term we could buy here, and then there is a long term value somewhere there. And as value is being created for institutions, demand is increasing, so their buying is increasing, and that first stops the price from moving up, from moving down. I'm sorry, then reverses it, and then produces some kind of rally. So it's on the rally that we need to see what kind of character we have to define whether this is a good time for us, to leave the trading range. And again, look at the character of this rally. And look at the character of this spot right here, this rally, and this rally. Definitely different. Definitely we're seeing more momentum coming into like the middle of the trading range, William, which I think, again, speaks as a confirmation for the bias and also suggests that the timing of the price to get out of the trading range is now. This is perhaps phase D that we're experiencing in a sign of strength.
I mean, if you clean up again, Roman, but this here for me, as you eloquently put, is of vital importance, because this is where, well, what's occurring here is when we use our analogs, our comparative and relative analysis, we can see that demand within the trading range is actually deteriorating here, as we said. But at the same time, we can also see that supply is beginning to deteriorate. Now, however, the supply, I would say at this stage, is still better quality than the buying. Okay, but it's here. It's here, where we see that now the selling has deteriorated, and we're getting the volume coming in. So we know there's a transition between sellers and buyers here. Hidden. We can label it hidden buying. But now, as we just said, now we're starting to get good quality buying after, arguably, we're having the worst bout of selling. So by combining both of those thought processes, when you're talking about timing, yes, now feels the time that we should break out here, at least go on to test here and break on through?
I'm going to make a bet with you because we usually do that type of stuff. We have a lot of games, playing with each other. I'm going to say that, well, you're going to say the same thing. But let me just kind of like, go maybe in a different direction. So I think we're both on the same page that, first of all, we're bullish. Secondly, the timing is now to get out of the trading range. We definitely should overcome this area right here. I think this is going to be exciting, for a lot of people to overcome this short-term resistance here because that's their signal. So we'll probably will see that in the price action. My bet would be that, William, we're probably not just going to come to the resistance. I think we're going to overcome this cluster here, and we're going to have some price committing above that.
Okay.
I mean, on this rally. So
on this rally. So so my first question to you was, do you think we'll come back and retest these lows? And I don't think we will.
I don't think we will either.
Because the volume here is suggestive. It is slightly lower, it's climactic. And it's just that this shows the weakest buying into this area, as we've noted. It is the weakest buying. And now it's been preceded by the best buying.
Yeah. So naturally, we should have continuation above the resistance cluster.
So do we absorb here a little before we break on out? We could get a very strong
for sure.
move.
Yeah, we should have some kind of stopping action right here.
Yeah.
We should have some kind of small pause right here as well. So, I mean, the structure of the move could be that we get out, we're creating the minus sign of strength, then retesting, right? We're creating, attempt to go up and maybe just overcome and having the highest close. How about that? So having like a highest close and then coming back, something like that. Okay. William, let me throw another idea here. Just from the analysis point of view, what else you could do here. We've talked about, and I've written them down, but we didn't really verbalize this. Volatility is increasing in phase A. This is very natural. Why? Because there is a change of behavior that is going on. Behind that change of behavior, we see elements of the increased selling, so their aggression increases. And we also see actually increased buying as well at the same time, which for some people might be a little bit illogical, like, why would that happen? But usually phase A in the reaccumulation is very interesting because this is where the majority of institutional buys and sells are going to happen. So then what happens in phase B? Phase B is all going to be, and I'm kind of rephrasing this, I'm not using the pure Wyckoff terminology. This is just comes from me personally. Exhaustion phase. This is not necessarily like a supply and demand, like what we've talked about like for years and years. This is not building of the course, although it is because you're increasing the William, what did you call this? The line of causality.
Oh, the length of line, as in causality. We can draw very crudely.
Yeah. To
like
me
that.
personally, William, I mean, like at this development of my Wyckoff kind of like logic, phase B is all about exhaustion. Why? Because phase A had this confronting demand and supply at the same time from big interests. This is where the battle actually happens. After the battle, we're exhausted. And then suddenly volatility picks up. So it's really, an area of phase C is more about the last test of how strong the supply is and the test or the readability of the demand to be present and to stop the supply and reverse the price action and actually start advancing the price in a different direction. So that's kind of like how I view the whole trading range construction right now, going through these different phases.
And you can see it, can't you? You can see the volatility here. And then we're just coming to the exhaustion phase here when we compare all the waves down. And now this does feel like phase C.
Okay. All right. Well, we are at 9:25. Let's jump to something else.
That's a nice time we spent on the Russell.
I know. As usual, we could talk about the chart for hours and hours. Let's come back to S&P really quickly. So let's talk to the audience. And I see some questions. I see some comments, guys. So we'll try, to see what we can do here. But usually we kind of so consumed with our discussion that sometimes we just skip this. But I want to ask everybody, just to engage you, what is the trend here? Really quickly, we don't have a lot of time, so just type it in quickly. Okay, up. Yes, the trend is up. So it's kind of interesting how there is always this anticipation, and especially from weekends, William, that we're going to reverse. We're going to reverse. So don't
We've been reversing this market for years now.
Yeah. Well, and we will reverse at some point.
Of course.
That's for sure. We will reverse on the shorter time frame. We will reverse this trend as well. But for now, it's higher highs, higher lows. So don't overcomplicate your thinking about what the trend is. Higher highs, higher lows, uptrend. Lower highs, lower lows, downtrend. You could use moving averages. You could use some other trend following tools that could show you what the trend is. And within the structure of this trend, and specifically, William, since the low in late October here, I don't see any reactions that are of different magnitude as we go up. And usually the construct of these reactions within the construct of the overall uptrend is kind of the same. We see that first, we see some kind of deterioration of the demand, deterioration of buying. Then we see some profit taken where supply is emerging. Then we see the price coming back aggressively to the support area. And then demand starts to occur, and that reverses the structure. This is the spot where volatility is the highest. And then after that, we kind of drift out again. And that repeats itself over and over and over again. And until that behavior is here, guys, we are in the uptrend. Until this is not broken as a behavior, until the change of behavior starts to occur, it's still an uptrend. So think like that, William.
It's up until it isn't. I know it sounds very simple, but we're in such a wonderful bull phase at the moment. But I'm putting this out there now, Roman. I think our run will end not from a lack of demand. I think it will be euphoric and it will be climactic. And I think that we may overthrow the supply line in a dramatic fashion.
Well, yeah, and we've talked about this. What we really need to do here to be excessively bearish, right? At least for the short term, for the time being, is just before we become excessively bearish, we need to be excessively bullish. And how would the axis of bullishness translate into this chart? Only with the increase of volatility to the upside that would lead us into the overbought condition in this beautifully defined stride right now of an uptrend. So something what we've had in late August or beginning of September, where we go into the overbought condition, overthrow, and then suddenly supply is so aggressively bearish. And that was actually one of the scenarios that we've discussed. So, and I'm thinking that we still would be having some kind of trading range here, which is going to be a larger reaccumulation structure. Maybe akin to what we've had in September, October, but larger, I think.
Yeah, I think when we become overbought, if we become overbought, but this is what I'm thinking, due to the nature of this run and the euphoric nature and just the unwillingness to have any kind of meaningful reaction, I think it will end, as you know, the classic Wyckoffian kind of thought process, that this will end climactic and it will be more pronounced than this. And what I'm looking for as well, that I think that we'll, from the climactic move, I think we'll come down and we'll break this within a few days and produce a change of behavior.
Okay.
And then form the trading range.
Another scenario, and we've talked about this, and I've shown you guys this, the way how we're approaching, like this whole area right here, texture-wise, what does this remind you of? I mean, like specific historical price movements that look kind of the same, right? So we are in the uptrend, we are in the specific stride, and all of the reactions are somewhat of the same quality. And then we're talking about the climactic action and how it should end. So go back into the history, and I really like this period as a potential analog, William, from 2011 October, spring. We're going through different periods of absorption, and then look at the stride that comes next. So this is what I'm seeing right now in the market, where all of the reactions are somewhat of the same magnitude. So the approach to that climactic action could be like this as well, where we have an overbought condition. It's not necessarily climactic per se, right? So we don't see the climax there, but it's an element of the preliminary supply where we have a really big or bigger magnitude reaction that suggests that they're taking profit now at some point. And then the last final climactic run into the actual buying climax. And then we go into some kind of trading range that could have multiple resolutions, either to the upside or to the downside and more complex reaccumulation. So this scenario is also a possibility.
It's I think it's interesting times ahead, but it's up until it isn't, Roman. And I mean, if we just quickly look at this, one thing I'm looking, when we're doing our comparative analysis, I mean, what can you notice about the reactions? I mean, they're getting weaker, if anything.
Yeah, they are smaller. So, what would be the logical conclusion out of that?
Well, higher prices, lack of selling pressure. Selling is diminishing, as you said, on the way up here. And because we are in an uptrend, it's the sellers that need to prove themselves. Yet at the same time, we just spoke about that reactions are getting weaker. So higher prices.
Okay. Well, I was thinking more about the character even, because when we see that the reactions are diminishing, that tells us that the selling is starting to deteriorate or being exhausted. Within the context of the uptrend, this means higher prices, as William has said. But it also means that the price, character-wise, could accelerate. So we could have that easier move up and acceleration.
To that climactic move is what I'm thinking.
Yeah.
The recipes, you can feel it kind of unwinding in that way, if that makes sense. Because if there's a lack of selling pressure, there will be a buying frenzy at some point, and then I think we'll end up with a pronounced euphoric climactic bar. But it's all hearsay, isn't it? We'll just let the market unfold.
Okay, let's go to something else. Okay, so you and I, we've been quite fascinated with gold for some time, right?
It's been interesting.
An enigma.
It has.
This is kind of like the lines that we have here. It's kind of hard to understand the lines until you zoom out. So usually when you zoom out, you want to see the interaction of the price, current price, with something that happened before. So we see the all-time high here, and it's very natural for us to come to this all-time high and have some kind of climactic run and then pause. This is a pause within a much larger construct of a much larger accumulation here. At least that's how we're interpreting this right now. So within that construct, we would be looking into this trading range right here, and we would be thinking, okay, we need to confirm the bias that this is a reaccumulation. That's number one, or fail. We need to confirm the timing, and we definitely then, once we have the continuation here, or if we have a continuation, then we need to talk about the character. So, William, with those thoughts, I mean, what's your view of this whole area right here? Do you think that this is still a reaccumulation?
Well, yes, at this moment in time. I mean, look at this buying off the lows and this rally and how we retrace up. We push on up, we trace very deep into here. The market, if we just draw this in, this was support over here. This is the rally. We should react from here. Okay, this is resistance. And look, minimal reaction. Then we break on through. And now there's a little bit of stagnation, but still we're holding support here. So for all intents and purposes, why would we not expect a test of here? Now, there is a lot for this market to overcome, and we spoke about the area. It's here, isn't it, Roman? This high volume right here. But if you zoom out quickly, sorry, Roman, I like what you spoke about, the where we come from, the accumulation. This is the base. And what do you notice about this base? This is where we're building causality. We've been building this from 2013, 6 years worth of causality. That's what I'm thinking in my mind. We can crudely draw just a length of line like so. And if we take this out, that's how much we've used. There is much more energy or potential energy to the upside. Now, this is old resistance, okay? And the market has the right to find selling here. Yet, if we can come back from the lows or this swing here, we're only retracing, what, 20% from this low or, from the base of the accumulation. So again, this reaction is kind of minimal. But if we go back to look, so again, that's a bullish standpoint. But if we go back and we can zoom into this area now, Roman, we did have this change of behavior here. Okay, this threw us off a little because we thought we'd attack these highs, but at the same time we did note there's awful lot of selling here, and here. The market did have a lot to overcome. It didn't, it failed, but then this action was a bit wacky. I didn't preempt kind of this move, but then we hold, then we rally. What do we notice about this rally? Very, very choppy. Look at all the wicks, all the tails, etc. But we push on higher. And price is king. We come into this area of high supply. And this is the reaction. It isn't the best reaction. This buying, although poor, is better than this selling. But then we push on up. We kind of get a fake break here, and boom, we get the volatility here. And there's a transition here between sellers and buyers. We close well off the lows, and this is the result. And this is where we are right now. We get good buying, no continuation to the downside, an inability to react, and now we're breaking on through, and we're holding here. So for me, at this moment in time, I'm more bullish than I am bearish. What are your thoughts?
Yeah, well, I agree with you. I mean, like this rally, even though we called it correct, I mean, like we literally called it right here, and it kind of reminds me of Russell situation where there is like a mini structure at the bottom, and then look at exactly the discussion that we had on Russell, right? So like comparing this reaction right here to this one. This is a different law that we would be thinking here because it's slightly different than Russell. In terms of the price structure, it's the same. But in terms of how the effort versus result works, it's actually different. The downward effort is diminishing significantly relative to the stop in action right here. And yet price volatility increases. And it cannot produce a favorable downward result by not committing below the support level, but kind of the concepts are the same. So from here, this was a nice call that we're going to have, some kind of rally that's going to overcome this area right here. So this was also a really good call on, we are going to reach the resistance and commit above. It was viewed as a change of behavior, and then market happens. I mean, we could go on a side note conversation about how in a lot of cases, people really would like to know what's going to happen next to have the tool to identify what happens next and for that tool to work all of the time. And this is not how life is. This is not how market is. The market could be so unpredictable. A central bank could come in and dump gold, and that's would increase the volatility, and that's going to produce this type of action. So there is no tool that's going to predict that some central bank is going to come and dump gold. I mean, like, you just don't have this type of tools, guys. So you have to come to a realization and to the acceptance of the idea that market is uncertain. You will not know what's going to happen tomorrow, but you could definitely do your analysis and create some kind of hypothesis as to the long-term trend, as to the intermediate-term trend, and even a short-term trend, as William was, walking us through this area right here. But William, I think that, you've described the short-term ideas here, so I'm going to talk about intermediate-term ideas here. A change of behavior rally that is being followed by the reaction where we see the increase of volatility. And with the downward result actually diminishing. Why? Because with all of this volatility, guys, that we see from, after this rally, what does this volatility achieve? I mean, do we significantly go down? We tried. There were 2 attempts that were extremely dangerously volatile, but we still within the construct of this whole trading range right here, bullish. But as always, increase of volatility suggests that we need more retesting. And because of that, William, I'm thinking that if we're in this big, large trading range, short-term moves, and my strategy would be here just to trade more on the shorter-term time frame. And off the bottoms, I could buy maybe like long-term position. And I have a position in gold since 2019. So I was buying here. I wasn't necessarily buying here. And you just hold that. And short-term, you just day trade it or swing trade it with smaller chunks that you take.
Yeah, I mean, there's no edge from swinging here because we're slap bang in the middle of the trading range. But what do you see here, Roman? If we compare this reaction to this reaction, first of all, the volume is lower, and second of all, this definitely shows more bullish characteristics on the second reaction as we close well off the lows. And again, another subtlety: we don't test the lows, do we? Do we test the lows here? I don't think we do.
I would say that this is a test. Yeah, for sure.
Oh, no, yeah. I mean, this is a test, but what I'm saying...
you mean slightly higher low? Let's just see.
Yeah, slight
yeah, I think it's a slightly higher low.
Yeah, I like to see that again. So if we compare this to this definitely shows better buying. And after losing our analog, this is what happened after the last reaction. Now look what we're having. And if we look at the internals of this rally, as we said, good buying, come to resistance, inability to react, we break on through. Now, there is no follow through from here, granted, but we do manage to break above the highs of the initial breakdown bar here, which took us into these new lows. So the market is achieving something here to the upside. Now, does this mean we're going to hold here and break on through? Well, I would say there's still high volume here in this area. Will we come back down to test in here? What are your thoughts here, Raymond?
Yeah, I think that we definitely, I would even want to see that testing. Why? Because it's through the testing that's when volatility goes down significantly, right? So if we go down and then we would be comparing this reaction to this reaction, we would be saying like, okay, well, it holds, the character is different, more bullish as a reaction. And then let's say if we have some kind of even trading range right here, even better. So just to exhaust all of the traders that are hoping for gold to go up right away, immediately, and
I mean,
and get them out through inactivity.
Yes, I mean, I'm with you. I would love to see this reaction and compare it to here, and we kind of disconfirm supply in a way. And there could be, because don't forget that we're in the confinements of a trading range. If we do come down here and we see poor quality selling, there could be a potential trading opportunity because
that would be a really good spot right there.
Yeah, I mean, I'm waiting here for this area to be tested. If we break on through up here and we start flirting, there's no structural edge for any potential play down here. If we start reacting, we can start looking for, well, 2 things we look for: lack of supply and demand to emerge. And if we can see some tails in this tail here, along with declining volume, there's definitely a good potential for a nice kind of swing here, at least to certain resistance.
All right, William, let's jump to something else. Let's okay, so let's look at oil and then let's go to Bitcoin and then let's go to our
oil. Yeah.
exercise.
Oh, something I have to show you on oil as
Yes.
well. When we showed something on Twitter.
Okay, yes. So do you want to switch the screen right away?
Yes.
Okay, let's do that.
Because we spoke of this reaction,
Mm-hmm.
and that's.
I see your screen.
You can see my screen.
I see your screen.
Oh yeah, so that's yesterday. Yes, here we go. So we were talking about this area when we're coming into oversold in this trend channel, and we come to this little local shelf of support. We do have some volume here. We close off the lows, so this is a nice little area. And then this bar here, what I wanted to see here, because if what I'm trying to say here is, we come down on this bar. Look at this bar. We close well off the lows, popping volume, and we're in an overbought position. I see buying. Then this bar here, we come down, significantly lower volume, and we're trying to break through this area here on a daily time frame with a lack of volume. Okay, it's kind of suspect. So for Monday, when I come into the market, this is what I see, Roman. So this being that level here, this purple level here. So this is like this is on the 5-minute time frame, and this is the multi-day or daily support level. We just come under the lows, and look, we push on up, good quality buying. Then we push on up, we come to, as you can see, this resistance level, and look how we break through resistance. Look at the subtleties here. So let me just say this. We dip under yesterday's low, and then we met good buying as we bounce off support. Then we rally. There's an inability to react here. We push on up. We break through this resistance area. Resistance. And note the break, Roman. Good increase in volume. Look at the time in the morning. 4 in the morning. That's significant. That's active market participation.
Well, what time is that, by the way, William? I mean, like
that's 4 a.m. GMT, so that's probably 11 p.m.
Yeah, because I mean, the U.S. session, right? You could see that volume, guys, bell curve volume. So this is the U.S. session, and just do not want to interrupt you, but let's come back to that idea really quick.
Yep. Sorry, no. What this here? Do you mean?
No, between the 1300 and 1900. So that bell curve volume increase, guys, is the U.S. session. Just for those of you who are not familiar.
Yes. Sorry. Yeah, this is the U.S. session here, and this here is 11 p.m. Eastern Standard Time, and so this is a volume aberration for this time in the morning. Okay, and what do I note? Well, good spreads, increasing volume, breaking through resistance, and then what happens? Look at this reaction. And we hold support. Within this trading range. We get a local spring here, hidden spring here, or local spring here. We push it up, and then what happens? We break on up through this resistance level here. Let me just show you. So support. We break down, acts as resistance. Okay. Don't forget, structure is of vital importance, or especially for the way that the way I approach. And then what do you note here, Roman? As we drive up, volume increases.
Volume increase, yeah.
Then we form a trading range. What do you know about this trading range? Volume declines. Ergo, we're at resistance where the market has held and tested 5-6 times before. We're flirting with this level. And there's a lack of selling pressure. And not only that, when you look inside this trading range, what do you see? Where's the high volume bar here, Roman?
Spring.
Exactly. We get a nice hidden spring here. And if you're involved in the markets at that time, that is a very good place to play. Now, you'll be proud of me, Roman, because you know I don't like to take trades near the open. However, coming in, so bearing in mind where we are on the daily time frame, and now we've tested this, we've bounced off a demand confluence, and we drill down into the 5-minute time frame, and all I see is strength. We're good quality buying. We're breaking through resistance areas with increasing volume. We're holding gains. We're trading sideways, building cores all along here. Then here we see a lack of supply. We see a spring. So right from the open, look at this bar. We dip down to reverse and close firm, huge volume. And not only that, we still have the demand line to work with and this level of support. So again, we have a demand confluence. So here, you're entering on the 5-minute time frame with the buy or the overall sentiment from the daily time frame, and you can ride this out. You pass your cover up here, and if you can manage the trade well, you get a very, 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 $2 is available from the lows here to the highs. But how you manage that trade.
William, it looked so beautiful. You described it so well, but I have a problem with this trade. I mean, if you condense this whole thing and just show the previous day. And the problem is, for the US trader, how do you trade this? Because at the end of the session on the 21st, your buys could be an accumulation, but your short-term buys are still to the downside. So you can't open a position there to hold it overnight. So every confirming action happens overnight. So you come into the US session and you already have to buy it for 64.20 or 64.10.
Yes.
So you kind of, with the price action, you're not priced out. The trade is available there, but you're missing so much of that move.
You are missing the move. You are indeed missing the move, but that's the nature of the markets.
Yeah.
Like I'm sure if for those who trade forex, when you first start trading on forex, you spend 18 hours a day, all times trading. But the whole purpose here is to understand where we come from the higher time frame, and we've rejected we've rejected an area in an oversold condition on a daily time frame, and we found buying at a demand confluence. So when we look inside this bar omen, and we can see the emergence of buying, it has the buying through resistance and inability to react and stuff. When the market does open, I do have a bullish bias. You can't come into the mentality into the market thinking, this has already rallied $3.
Yeah.
It can't go up anymore.
You have to be open for continuation of that bullishness.
Yes, you do have to be open. And yes, I mean, ideally, you would probably like this trade, wouldn't you, down here, right? Or at least in here. I mean, if I was involved in the markets, I'd trade this lovely little hidden spring here.
I mean, any of those trading ranges on the way up, like stepping stones, would be great places.
They're fantastic places.
And you still could trade those, William. I mean, like right now, oil market is also like, you could trade futures even after the market hours. It's just like, if you worked through the whole day, you extracted your intraday profit from that, you're going to go away, you're going to rest, and so on and so forth. So, but you still kind of like follow, and you could put on some trades even after the close.
Yeah, and a good thing for new traders is MCL now. They got the micro contract.
Yeah. I actually really like those because, especially, with something that's very popular, like Bitcoin. Do that.
Yeah, I mean they are, and they've got volume as well. They are definitely active, which is nice. Because crude, for those not familiar, can be a beast.
Yeah, it could be. All right. But let's switch gears. Let's go to my beast.
Bitcoin.
Bitcoin. Yeah. Okay. So up. There is really no changes, and I mean, we've been discussing this. So our call was here on the spring. Our call was here. The add-on into this area of the supply, and then we're still up. So I don't even know where to start because I mean, like I'm so involved with Bitcoin analysis on a daily basis. Check out our Twitter, check out William's Twitter as well. And you can kind of like see the logic of analysis developing there through our tweets. And the idea here was that this is going to be the stopping action, and from here we're going to have different scenarios. The way how the character of this rally unfolded suggested that we are so bullish. And it was very interesting to see on Twitter and to kind of see the sentiment. I actually extract the sentiment from Twitter a lot, William, lately. It just helps me to confirm my analysis. So a lot of people right here were just basically saying, "You're wrong. You're wrong. It's going to go down. This is going to be such a fiasco for you," and so on and so forth. So the more messages I have like this, the more it confirms the overall bullish character. Because and there were two camps here of sentiment. One is purely bears, and one is bulls that missed this train. So I've had also a lot of students and people on social media that were saying like, "Okay, well, where do you come into this position?" I got in at 32 in both cases, or around, and I'm gonna hold it until it's done very much long term. And by long term, I mean like it's not only gonna go above 100,000, it's gonna go way above that. So this is a long-term position for me. I think that this trade is so well positioned, buying right here. So all of my comments right now are more short-term oriented. But what do we see here as short-term? There's still strength. There is no weakness. Even if weakness comes, do we see the effort behind that weakness? No. What kind of reactions do we produce here? Nothing. It's still bullish. Bullish.
It's wonderfully. I mean, how you held on to this spring. I still put my hat off to you, Roman. Within my trading plan, if a spring doesn't take off after say 15 bars or so, I get more leeway on a daily time frame. But I'm out. But what we did notice here is just a lack of supply. And then, so if you clean up the chart,
let me clean this up a little bit, William. It's just too messy. Okay,
so,
go ahead.
Roman entered around here, didn't you, on this spring? Beautiful, beautiful spring. And on this way down, no supply. But look at this beautiful move up all the way from the lows of the trade, essentially the trading range here, with volume. We come to resistance. This is reaction, very minimal. Then we push on up. Okay, we drive through this area, in one foul move, really. Then look, Roman, as you said about the lack of supply. So we push up, we react, we push up, we react, we push up. And now we're at this level here. And again, we're not met with any selling. Like, this is just strength. The buyers, they've accumulated all the way down here. And there's a lack of supply in this reaction. And this move after confirms the thesis of their supply is exhausted. There was no supply in here. So it's the sellers that need to prove themselves. And what I see from the lows up to here, Roman, is still no selling with good quality buying. Granted, we don't have overt volume, but there doesn't need to be. And we're still gaining higher prices. We're still breaking through areas. So it's very, very, we're gonna get here sooner rather than later. That's what I'm thinking.
Let me show you kind of like a scenario that I still look at, and this is from our Twitter. So this is this scenario where we were thinking that we're gonna overcome the axis line. So this is from David Weiss. And not only that, we're actually going to go into the body of the previous value zone where we were consolidating. And that's when we need to consolidate. So with that in mind, we still have, quite a lot to work with. We still need to, so we're right here, somewhere here. We could have a reaction in line with this stride right here, and then still go up. We could go up even from here, and kind of, we're already in this zone. We hit 50 just a couple of days ago, and but I would love the price to be a little bit more involved with these three bars, William. This one, and this one right here, because those are the major selling bars for us to test. there should be some profit taken. And what I'm thinking here in terms of the sentiment is that as the price goes into this target zone, so the bulls that were hesitating are going to be buying. The bears that were screaming that we're all incorrect on the bullish bias call are going to give up. And from weak hands, they're going to transition for a moment, for a second, into strong hands, and they're going to push the price up. Seeing that, institutions are going to say there is enough liquidity for me to take some profits, and that profit taking will create a change of behavior and ultimately will create some kind of trading range, which ultimately I believe is going to be a reaccumulation with an idea that the price is going to go even higher than 100,000.
Yep. Well, yeah, we need to be a little bit more causality and churn our way through the known supply over here.
Yeah. Okay.
But what I don't think we'll come back and test into this area though.
I don't think so. Yeah, and I think that's
exhausting. That's what this move was doing. It was exhausting supply. And, so that's it. Opportunity over.
Yeah. I mean, the character suggests that we will not be retesting. I think maybe potentially there is some kind of potentiality of like, okay, a slightly more meaningful reaction, maybe like this of the same magnitude, kind of having the same stride, but still recovering and going up from here. And again, you just kind of have to understand the sentiment here really well, because you have to see how how institutions are thinking about Bitcoin. An institutional view of the crypto space just in general is changing so rapidly in this year. So they're basically saying cryptos are here to stay. Cryptos for the next 20 years are going to be the backbone of all of the financial transactions that we're going to go through and more. So ultimately, they're saying that every company is going to be a crypto company or have some kind of crypto payments or some kind of processes based on the crypto. So a lot of companies, majority of the companies, are still not in this space. They still need to come in and buy. So, and that will produce a long-term secular run to like very, very high objectives. And that's kind of like the trade that I'm in. I'm not here to trade. I'm here to invest, stay, and just add. Okay.
Which you may get a sense of now we go to our Bitcoin chart.
Yes. So that was the breach for us. Yeah. Okay.
Yeah.
So usually, guys, what we do is we go through the market. Obviously, through this discussions, we give you a lot of concepts. So we're probably giving you like a couple of dozen concepts just in this hour, and then we go to the exercise. This is Bitcoin for our chart, and you could see that there are quite a few entries right here. And what's important here to understand is that obviously we're not trading every entry. And the goal for Will and myself is just to show the opportunities, right? The opportunities where potential point of entry could be had. And then in purple color, you have points where we would take profit. The blue is just where we stop. And William, I believe that we were thinking that this would be the next target for us, right? This red zone right here.
Okay. Yes. Sorry, is this a tail? Or was this just the? No. It's just
no. This is just the tool, the price target.
So where are we? We're here. Preceding bar. Look at the volume. Look at the spread. So there is some selling on this bar, but we are pushing higher. But there's definitely supply in this bar. So expect some form of reaction here. We're not pushing up with any alacrity. And again, Roman, look, it's not the best kind of breakout bar. Look how we break out above this local high, or look how we break out above here. Not the best. However, the next bar does suggest a down bar. So we are trending higher I don't think there's any reasons to cover here.
Yeah, it's still an uptrend, right? So we are like heavily into this position. I really like your comment about how the breakout is not that aggressive, right? We've seen very aggressive breakouts before. So that suggests that, yeah, we're going to trend up, but we're probably going to have some kind of reaction probably sooner than later. But we're still in this position. So let's just kind of like see where we should go. I already even forgot how we extracted this price objective. Maybe, students in this class.
No, I think it was from the overbought position. I think. Oh no, it's a measured move. Was it? Was it a measured move?
I think it was a measured move. Yeah, or something that we did here. I forgot. All right. Well, let's just kind of have it here.
So this is the key area, isn't it? Right here. Support here. Buying here. Support here. Okay, yep. So we're trending higher. And what I note here again is, Roman, we are pushing on the higher. But if we compare this reaction to this reaction, the supply is waning. I would expect some form of down bar from here, but nothing too concerned because supply is drying up behind us. So
yeah, and this was great because we had this increase in effort to the downside and decreased result to the downside based on the upthrust probe. And look how it recovers very nicely. So this is a bullish pattern right here where we have supply coming in and then absorption, really quick absorption, and right away the price shows where it wants to go.
Yeah, the way I like to think of these bars with this volume, because you would think on this bar with this volume, we'd expect some form of downside continuation, perhaps to at least test support down here. This doesn't happen. We get a quick resolution. Ergo, when we close above this bar, we disconfirm any thoughts of supply here because this should not occur if there is overt supply in this bar. In fact, volume's increasing here as we break them through. This is a superb reaction here, Roman.
Okay, well, what about tactics? I mean, like, would you do anything here?
No, nothing.
We should just wait.
Yeah, I mean, there's nothing to do here.
Yeah, nothing to do here. And if anything, probably my aggression on tactics is definitely going down just because of how we had multiple times, multiple attempts to get out on the bars that are, significant bars, like this one, this one, this one, this one right here. And we're still in this structure. So that just kind of shows us that maybe the buying is not that strong. So maybe we're kind of like in this last leg up, which, when usually buying deteriorates into, let's say, the end of the climactic action, into the buying climax, what happens afterwards is a very interesting thing. The change of behavior usually is very aggressive. Why? Because as demand deteriorates, it's exhausted. So just think about, the buys. The number of buys could go down. The quality of buying can go down. So therefore, when the change of behavior happens, aggression is more about somebody selling, and that selling kind of triggers a chain reaction. And under this chain reaction, we see more and more bias, even technical bias, are just getting out of this position. So therefore, change of character, is usually very aggressive. So let's see.
Yeah, I like it when it exhausts like that, an exhaustive move to the upside, and you get that change of character. Often you can see a swift move because there's a lack of, also a way to think of it. There's a lack of buying friction. Ergo, the market can be pushed down fairly rapidly with little volume, and if there is people with profit taking or etc., you can print very large wide spreads very, very quickly. That often does arise from a buying climax.
Okay. Well, let's stay with this. The only thought that I have here, William, I mean, like, if we're gonna have some kind of run into the stopping action, I definitely would like us to take some profits. So, again, where would we be taking profits? I'm thinking about, like, we were talking about the overbought line right there.
That's to me just the logical place, or an overt kind of buying climax, a climactic bar like kind of this, where we did cover before. If we print a big wide spread, huge volume, then yes.
Yeah. Also, guys, in terms of the targets, I mean, like usually in Wyckoff methodology, we would be using PNF. I really like just measured moves as well. It just gives you a very quick price objective. So like with the PNF, you could create a target zone. So the way how you create the target zone is you take the measured move from the low and then from the area of the breakout. And that's your target zone. So your target zone is roughly between like 60 and 54. So let's just see.
Very simple, very quick. That's what I like about measured moves.
Yeah, and then look at this. This line right here is an overbought condition. So I'd say like somewhere here, this would be a really great place to take profits again, like we did here and like we did here. Okay, let's see what happens. I'm going to get rid of this. They're just distracting us.
Yeah, that's better.
Okay. Nothing really happens here.
We do. I expected more of a down bar, wider spread, but the fact that we're holding here is good. At the same time, there's definitely supply up here. We're trying to absorb our way through. That's what this is showing.
Yeah, and I would say like, what's our risk? So this is the line for the risk, and this is the line for the risk, and then this is the line for the risk. So 3 levels. If we have the breakthrough all 3, then we would have to change our opinion as to the bias. Okay, continuation. And I would say that this is a healthy continuation, William. And the reason why is because, well, first of all, the reaction before that was not that big. But the volume signature was still high, so it just kind of suggests absorption there. But also just looking at these 2 bars, how much volume it takes to move the price. And it seems to me that this is still somewhat healthy as a price movement, so just looking at the amount of volume that it took. Okay. All right, let's go to the next bar.
Okay, that's another good sign. I like that. There is no continuation to the upside. However, look here and here on these 2 bars. This is lower. This has lower volume, which tells you there's a lack of selling pressure. Albeit it's still trying. I'd still expect perhaps maybe another bar like this, Roman.
Which one?
Like these 2 bars over here.
Oh, like these 2 bars. I mean, so more of the reaction.
This isn't the best move into new highs here, Roman. I must admit. But again, the buyers are in control. It's the sellers that need to prove themselves, and at the moment, the supply is decreasing.
Yeah, interesting. Okay, I'll take this bet. I think that if we have something that is reactionary on the next bar, it should be contained by this bar right here. Otherwise, we again, short term would be like thinking about changing the views. So maybe like a tail, but ultimately, I think that we have to have some kind of attempt to break out as well. And I wonder if we're going to have diminished spread character here. Although selling has diminished,
Yeah, selling has diminished. I mean, it's a very narrow spread in itself.
It could actually expand here as well. I would love to see a bar like this.
Yeah.
Okay, well, let's see. Okay, good call on that second bar.
Wow, there's less supply, even still. Well, if we're using our analogs now, an up bar.
Okay, yeah, should be an up bar after that. Okay, let's see. Okay, more of the supply coming in and testing the body of this bar. So that's this tail that we've talked about. Again, we want to be contained within this bar. We don't want to break this level. We don't want to break this level, and definitely not this one.
Yeah, nothing to be concerned about yet. When we just look at the volume signature, there's no overt volume coming in. And essentially, what you've got to ask yourself with these 3 bars, and we're up in the highs. Look at the volume. There is no real volume here. The supply that is there is unable to produce any price movement to the downside. As you said, we're still contained within here. So, and this last bar here shows there's a buying. Here, the first two bars we close off the highs. You know, a little bit of selling pressure. Here we close off the lows. So although technically a down bar, it shows there's more bullish characteristics in this bar.
Okay, let's see what happens next. Well, let me ask you this question. I mean, like, if we're talking about the bullish buys right now and it's still being confirmed in the reactionary bars, in the expanding bars, then why are we not buying?
There's two reasons. Well, I don't like. I mean, what I'm seeing here is that the buying is actually deteriorating to the upside.
Yeah,
it's not like it once was. I don't want to be. I think it's a tad aggressive buying here. This is the worst breakout we've had into new highs for the first a couple of weeks here. In fact, yeah, this is the worst breakout we've had, and I don't like to see it. I just need to gauge the quality of selling from here.
Okay.
Why would you be prone to take?
No, I'm totally with you here. For the deterioration of buying. So again, I think that it's better at this spot to concentrate on finding the top and not distracting yourself with add-ons, rather than just like trying to add to the position, because your mind is going to be distracted. And I would rather concentrate on like, where's the top here? Okay. Another down bar.
I didn't expect that, Roman. But again, we're still contained within here.
Yeah.
I mean, just think logically. We come up like this on 3 bars, and then we got 4 bars, and there's an inability to react. So again, there is no real supply pressure.
Yeah, I would say it's all about deterioration of demand at this point, rather than the presence of the supply.
I concur.
Okay, so still up. Okay, interesting bar. Still within the body of that bar that we keep talking about. So look at deterioration of the spread itself compared to the breakout bar, and look at the test as well, right? So the test is in the upper part of this bar here, and then the test is actually almost testing and touching the low of that bar. So definitely demand is not of the same quality. It's not like supply is there. It's just, there's some selling, but it's not breaking the levels that we would be concerned about. The last bar is actually, somewhat encouraging in the sense that we tried to rally.
Well, I mean, I like it. I mean, the pop in volume. So within this past 5 bars here, we have 4 down bars that don't produce any movement to the downside per se, with low volume. Then the highest volume we have in this little mini trading range is bullish, is buying related, and is an up bar. And we close off the lows. Yeah, I like it. This is kind of encouraging, like you said. If the sellers were going to have an attempt to move down, why this would be surely after 4 bars. This would be the bar where we kind of see any attempts to test down here, but we don't do. We find buying. So by that very notion, I'm kind of disconfirming the thought process of an attempted move here. Not that I'd be thinking that, because there's just an inability to react. That's all I see here. I see a deterioration of demand, like you said, and an inability to react. Who's in control? Again, it's the buyers. We're trending higher. So, it's just an...
Well, let me ask you this question, William. Could we have a more meaningful reaction here?
I'm going to say no. Purely because of these bars here tell me there's no real supply in here. I mean, if we compare these 4 to these 4, or these 5 over here, look, the volume is very low. The narrows You know, there's restricted movement with that volume. We can see that from the very tight spreads here. Compare that to the over here. You know, we have high volume, and we have high volume, and the spreads are larger. So we do get a more complex reaction. But due to the fact that we have smaller spreads and lower volume, it's kind of suggestive that, you know, perhaps we should just push on. We can have another couple of bars, but I'm thinking that we're going to push on higher.
Mm-hmm. Okay. Yeah, and I'm thinking that we just need to sustain this stride right here.
Yes.
You know, it's a great place for us to bounce off it. So, and obviously, if it's broken, then we're just still in this structure. So let's just see what happens. Okay, encouraging bar. There is no downward follow through. We're closing slightly higher. The volume diminishing is diminishing, so that suggests, you know, selling is not necessarily there. So I would say that probably there's going to be an attempt to attack the new high here.
Which is interesting though, because this is the worst bout of low volatility at the highs we've had anywhere. So how would you interpret that, Roman? What would be your thought?
Low volatility?
Yeah, at the highs here. There doesn't seem to be any real commitment.
Well, again, I think, you know, low volatility just reflects the buyer's exhaustion, just because the buyers have been buying on the way up aggressively, and then they like after what 45,000, 46,000, they stopped. So there is less buying. The buying that comes in is not of the same quality, so it's not as aggressive. So therefore, you're gonna have those periods of low volatility where the price just kind of like, you know, does nothing. And then at the same time, the bias is so well established that nobody wants to sell. Okay. One thing that I'm not liking, William, is that we're not doing anything here, but sometimes not doing anything is doing something.
Yeah, yes. I mean, this here, Roman, this is no man's land. There's no edge here, I don't think. I mean, but I like this bar from a bullish standpoint, because now we have the lowest volume down bar we've seen since this kind of this shakeout over here. Let's just take things back to basics. We're pushing higher, and this is the reaction. There's an inability to react with extremely low volume. So ergo, higher prices. That's just all I'm thinking in my mind. I'm getting too caught up in the bar here, Roman.
Yeah, no, that's fine. That's great. Yeah.
Yeah,
that's exactly what we're doing.
We're going to push on higher. What I'd like to see, if we could do a little local spring, I'd buy that.
Yeah, I was thinking, you know, when we have this type of scenarios, right? So any type of springs, what they produce is the increase of that supply and increase of the demand at the same time. So absorption is happening on this type of bars that, you know, allows the price to stabilize and to start having, you know, more movements in the direction of the overall bias. So yeah, let's see if it happens. Okay, here we go. Here's your spring.
Ooh. Not the best, is it?
Yeah. But at least the close. I mean, like, I like the close, right?
Yeah, but still technically a down bar. We don't penetrate that deep. It shows a lack of
there is some selling, but it's not very aggressive. It doesn't produce the result that we would want in a bearish scenario.
We know there's buying in this bar due to the volume signature and the close off the lows. Very obvious. It's not a clean entry here at all. If you're gonna
and now I'm thinking, William, that maybe this whole area right here is just a test of this breakout bar.
Or we're all testing on the highs of this high volume. Yeah. Same area, literally. Yeah. Okay.
But this test still, I mean, like, it's still in the 50th percentile of that breakout bar. So it's still, if we would be thinking that this whole area is the test to that breakout bar, It's still a bullish test.
Again, though, using our analogs, if we compare this to over here, the tight price action, look, this does show comparatively strength over here as opposed to here, and less volatility. So, yeah, I'm still happy to hold here, Roman. I don't think I'd add on that bar. It's a tad aggressive.
Okay, well, let's talk about the stop losses then, right? So, I mean, naturally, our stop losses will be behind, significant bars like this one right here, like this one right here, or this one right here. So there, and we're not going to give you like, okay, just 3 levels, and then everybody would define based on the intention of the trade. If you're a long-term trader, then your stop loss most likely will be, below this breakout bar. If you're a short-term trader who is a swing trader, your stop loss is probably going to be more around this area right here. If you're a very, very short-term oriented trader, you should be out of this position because you would be getting in somewhere here, and you would be getting out somewhere here. Okay, well, let's just see what's going to happen. I mean, like, the suspense is killing me.
Yeah.
Okay.
Okay.
Good bar, no follow through to the downside.
Yeah. I mean, given the volume, I'm not thinking no demand here. I'm just thinking it's the best buying, the widest spread, well, a good firm close on relatively low volume after this bar. It's nice. I like to see that.
Okay.
Still not great buying though.
Here it is.
There we go. Finally.
Okay.
Some kind of resolution. We still don't break through, but it's showing signs of strength. Volume's increasing, spreads increasing. Oof. I think it's telling me that this move is done now. This testing's finished and is successful. Because the last 3 bars are bullish. This one here, close off the lows, slight pop in volume, buying. Here, as we just said, the best buying we've really seen in here. And now we're gaining continuation to the upside with an increase in volume. Spreads increase, closing firm. I think we're going to break on through now.
Okay, yeah. It feels like, finally, after the low supply or low reaction on that low supply, we have some demand. But, definitely this bar is probably confirming the whole idea, William, that, the demand is not that strong. The demand is not, it's in control, but it's definitely not demand that we've seen before.
No, it's not. It's not certainly not like this. No.
Yeah.
Or even like this. Even that's nice. I like to see that.
Yeah.
It overcomes this fairly quickly. So it's achieving something.
Not like this even.
No, yeah. Okay.
Okay, so we're probably somewhere close. I would be thinking of kind of like stop loss movement here, but I want to see that final bar.
I mean, for me, if we're talking stop losses, this bar here is important to me because this is like the shakeout. So this is a very key, crucial area for me. This is my area on the chart. Oh, right, okay. Next bar. Oh, there we go. Finally, good resolution. We break through, sustained volume, spread, a firmer close as well. We do close a little off the highs here. Good.
Now I would combine these bars for those of you who are familiar with our significant bar analysis. So this is a combo breakout right here. So when we look at this bar by itself, we might misjudge the breakout characteristics. But when we look at the combo, then we see that the close is actually extending away from the resistance from the breakout point. It's done on relatively low volume signature, which I like also as well. It just tells us that selling is not present there, and it's just confirming what we talked about in this area.
Yes, and this is good. This is good demand coming out. I like to see it because we're disconfirming supply in this move, and all the high volume bars within this move actually show buying. Again, another subtlety, but a subtle sign of strength.
There is also a little bit of the acceleration right there.
Yes.
So I wonder if we are trying to interact with this line right here. And if we are accelerating, maybe this is an attempt to overcome, maybe to go to 56 and just to, for the first time, have the close. Like here, we don't have the close above this line. We don't have the close above this line. We have a close above this line, but not necessarily that deep. I would be thinking, could we have something like this, where we extend away from this medium line right here?
Okay.
Okay, well, a tail.
This is nice though, Roman. Look at this. Look at the sustained volume breaking out. We haven't had 3 bars like this. We hit 3 bars here, but this is these are all in sync. We do see a little supply of the highs on this bar though, granted.
So would you say that your view on the demand character is changing with this 3 or 4 bars?
I would say yes. I'd say this is kind of a nice, good break, which we haven't seen for a while. And importantly, where does this occur? This occurs after low volatility supply move, exhausted environment, I should say, a low supply environment preceded by good buying. I like that. That's good.
Okay. So, we do have some presence of the supply though.
There is some supply there.
Yeah, which is expected. I mean, like, look at this tail right here. Look at this tail right here. I mean, we could even kind of like analog those and just say like, okay, let's see what comes next. What kind of test of this bar we're going to have next. And that would could give us a little bit more of the indication of what to expect.
So if we do see a little bit of supply here, I mean, would we expect... I wouldn't expect a test down here purely because of the same reasons on the Bitcoin on the chart. You know, where you took the spring and we have that long exhaustive move, which shows a lack of supply. This is kind of the same thing here. There's just no supply at resistance, and like, why would we come back down here to test? That's what I'm thinking. Because we get good sustained volume here to the upside.
All right, so let's play a game, William. What's the next bar? Is it up or down?
It could be an inside up bar. Yeah,
I would say the inside because we are basically and the key here for those inside bars, let's forget about the tails, but just the body itself, like the open and the close. So that's what we're looking for. Okay, let's see. It is an inside
better
bar.
than I expected.
But definitely better. I was thinking more like bullish, but like this.
I was looking at the analog as well, and I was thinking something like this or this. But okay, that's better.
I thought that maybe this bar had more supply than this one right here.
Yeah, it does. But the environment in which it's different. Here we're at resistance, and we have this kind of shakeout and all this. Here we're breaking on through with momentum after a no supply environment. Okay, well, we are approaching this channel. We're overbought here in this little micro channel.
We're definitely in the target zone. So our target zone was 60 to 54. So we're definitely in the target zone right now. So whenever we are in the target zone, guys, what we're looking for is for the evidence of the first deterioration of the demand. Secondly, elements of stop in action. Thirdly, elements of the reversal. And then if we want to go further into the structure, a change of behavior bar, and then a change of behavior reaction, which is basically an automatic reaction. So far, but by the way, would you possibly interpret this as kind of like deterioration of the demand as well? I mean, when we look at all of these bars here.
I mean, it is. However, it's still technically an up bar. We do close off the highs. It's no overt supply. There is a slight deterioration. There's no denying that.
Okay, so...
But I don't. But the thing is, it's where we come from, Roman, and what we've achieved here. no supply. Now we're breaking out with arguably the best breakout we've seen. Well, if this breakout is better than this breakout, I know that confuses people, but this feels a little climactic.
Okay, well, let me throw a view of our analysis here.
Okay.
Would you consider taking profit here?
No, I don't see a reason to.
Okay, second question. If the price deteriorates, and let's say if the price gets below the low of this second bar, would you take profit?
Well, so do you want to put in a hard? You can do. I'm just looking for some kind of overt bar. I don't see any reason to take off all our other places. You know, we had climactic behavior and we're near overbought. We're kind of in the middle here. I know we have the median line. We are struggling, and we have this kind of trend channel we are overbought with. So if you wanted to partial cover, but I'm willing to give it another bar.
Oh, no, for sure. What I'm saying here is look at all of the bars that are, significant bars, and how the significant bars are not being reversed. So it's an upswing.
Oh, so, yes. So I understand where you're coming from.
From this low, nothing was reversed. This is not 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 yet reversed. So what I'm saying is, we might not necessarily have to chase the top. We could chase the reversal itself if the bar like this comes, right? So I would just put here a stop sell, and at least for a portion. And when we show you guys the some kind of partial cover, that's what it is. It's partial. It's not necessarily the whole position or even the half. It's like between 10 to maybe like 25-30% of the position, depending on where we are in the structure and so on and so forth. So I would say, like, if we have a down bar like this that commits below this low, I would probably take the profits here.
I know, I like that thought process or that management purely because if this prints and breaks like one of these bars, they're basically, it's a question mark because it's a change of character because it hasn't occurred previously. So yes.
Okay.
I wouldn't do that. I would do this bar, this one here, the third bar.
The third.
The low of
this one.
Around 50. Yeah, that's the bar.
Yeah, this one. This is 54. This one is the key because it was breaking out above the medium.
Yes.
Okay, William, we are at 10:38. Why don't we stop here? This is a great cliffhanger, I think. Especially for our guests that have come to our session. Hopefully, you guys enjoyed it, and then William, on Monday we could continue and see what happens.
Yes, looking forward to it.
Okay, well, with that, guys, just to repeat that for those of you who like this session and you think that there is value for you by attending these sessions, we are gathering each Monday from 9 to 10:30 Pacific. You could go to our website, wyckoffanalytics.com, sign up for the promotion, which is currently $50 for the next 3 sessions, and then $125 after that. If you have any questions, shoot us an email at wyckoff@gmail.com. We'll gladly accommodate any of the questions that you have. And with that, William, any final thoughts?
No, I thoroughly enjoyed our session. And we put everything into our session. We hold nothing back on the table. Yet at the same time, there isn't much hand-holding here. We we are prone to go on our rants and dig deep into the price action, which I think we've showcased that today.
Okay. Thank you again, guys. And for those of you who are in the class, or for those of you who are going to sign up, we'll see you on Monday. Thank you, guys. William, thank you.
Take care.
As usual.
Thank you.
Bye-bye.
Bye, Roman. Bye, everybody.